electricity bills in Singapore could rise again, and the reason may be a conflict happening thousands of kilometers away in the Middle East. The Energy Market Authority has warned that rising tensions in the region could push up global fuel prices. And if fuel prices stay high, electricity prices in Singapore may eventually increase as well. But for now, most households will not see an immediate jump in their electricity bills. That is because many consumers in Singapore buy electricity through fixed-price contracts from retailers, or they pay the regulated tariff from SP Group. These pricing plans help protect households from sudden swings in the wholesale electricity market. In other words, even if global fuel prices suddenly spike, many families will not feel the impact right away. However, this protection may not last forever. If global fuel prices stay high for a long time, electricity bills in Singapore could still increase in the future. Households that buy electricity through the open electricity market may face higher prices when they renew their contracts. Meanwhile, households on the regulated tariff may also see increases when the tariff is reviewed in future quarters. The regulated electricity tariff in Singapore is reviewed every 3 months. It reflects the real cost of generating electricity, and one of the biggest factors affecting that cost is fuel prices. Right now, the regulated tariff stands at about 26.71 cents per kilowatt hour. That is actually slightly lower than the previous quarter, which was 27.55 cents per kilowatt hour. But Singapore's energy system is highly dependent on global fuel supply. The country imports almost all of the energy it uses. Around 95% of electricity in Singapore is generated using natural gas. In 2025, about 43% of Singapore's natural gas came through pipelines from Malaysia and Indonesia. The remaining 57% came from liquefied natural gas, also known as LNG, which is shipped from global suppliers including the Middle East. Energy research firm Rystad Energy estimates that about 42.5% of Singapore's LNG imports in 2025 came from Qatar. This means that global conflicts affecting energy supply can directly impact Singapore's electricity costs. Singapore has already experienced the effects of global energy shocks before. During the global energy crisis between 2021 and 2023, electricity prices in the wholesale market surged sharply. At one point in October 2021, the uniform Singapore energy price hit around $491 per megawatt hour. Another peak happened in May 2023 when the price climbed to around $492 per megawatt hour. These sharp spikes led the authorities to introduce several safeguards to protect the energy market. In 2021, the Energy Market Authority set up a standby LNG facility. This allows power generation companies to access extra gas supplies if normal gas deliveries are disrupted. In 2023, the regulator also introduced a temporary price cap system. This acts like a circuit breaker to prevent extreme price swings in the electricity market. Power generation companies are also required to keep enough fuel reserves, including diesel stockpiles that can be used as backup fuel. These measures aim to strengthen Singapore's energy security and protect consumers from sudden shocks. Still, the reality remains clear. Because Singapore imports almost all of its energy, global events can quickly influence the price of electricity at home. So here's a question for you. If global conflicts continue to push up fuel prices, do you think electricity bills in Singapore could rise significantly in the coming years? Let us know your thoughts in the comments below. And if you want more clear and engaging news stories like this, remember to like, share, and subscribe to 2230.